Hi everyone, this is Joe Gentile from Sarraf Gentile LLP. Today's video, I want to discuss what I refer to as the IUL premium financing squeeze. And what this is a scenario where when interest rates go up, particularly if they're going up quickly, this can create real problems for multiple angles for a policy that's premium financed. So if you were sold or you're in the process of being sold an IUL, then naturally one of the things that's emphasized is the indexing feature and how that functions with the 0% floor, but yet you can get returns that are tied to the market. Sounds great. Most of these indexes that are being pushed today are what are called volatility controlled indexes or excess return indexes. And these are indexes which look very good when they're illustrated because they were illustrated when interest rates were low. And I'll explain in a minute why that's important for this. And also because they have these volatility controls in place, the insurance companies can sell these with no caps or very high caps. So it looks like they have a lot of upside potential. The way this is achieved is because the insurance company knows that the return on the index is going to be limited. And the way they limit that is you take whatever there's other ways, but this is one of the primary ways. You take the interest rate of the day, whatever it is, and you deduct it from the return on the policy. So if interest rates are low, let's say they're at 1% or less, then there's not much being deducted in terms of returns from the index. So if you look backwards to periods of time when interest rates were really low, these volatility control indexes can look fantastic in terms of their returns. But if you come to the present day, wherein the first half of 2024, and interest rates are 5.3%, well, that's a lot of drag on the performance of that index. So if you have 5.3% interest rate being deducted off the top from the index's return, that means you have to get over 5.3% just to get a positive return. And if you have a good year, that's still a big number that's getting deducted off the top to bring down that value. So for these volatility controlled indexes, or excess return funds, whichever you want to call them, if you have a period of time where there's high interest rates, that acts as gravity, bringing down the returns for those indexes. Now, it creates a squeeze if you're in that, because at the same time, while your returns or your crediting is being brought down by high interest rates, your the interest due on the loan that you have from the premium financing, if it's a variable loan, which many of them are, it goes up. So as interest rates increase, the crediting returns on the policies decrease, and at the same time, the interest owed increases because your interest rate just went up. So having both of those things happen at the same time creates a squeeze. It's a very negative impact on the policy when that happens. It could cause the need to kick more cash in, get more collateral. A lot of bad things can happen with that. So one of the unfortunate things I think the life insurance space overall, but particularly when you're dealing with premium financing, and yet again, particularly when you're dealing with IUL, I think a lot of times these risks are not fully disclosed, or not disclosed at all in some cases. So a lot of people get into these deals assuming that there's less risk involved with them, and not really being told how these deals actually function. Like what I just described right now. Of course, there are great agents out there that describe these things, and my hat's off to them, but there are a lot that don't. So personally, if you've been involved in a premium financing deal with IUL and you're experiencing one of these negative impacts right now, where the policy is not performing anywhere near what you would like to believe it would be, I think it makes sense to speak with an attorney. If you like, if this is an issue that affects you, please feel free to reach out. I'm happy to vet policies and to answer any questions that you have. And again, if this is a topic that interests you, this intersection between law and life insurance or annuities, please subscribe to the videos. In any case, hope you all have a good day. Thanks for watching. Bye.